Hello everyone, this is Teddy Keckstaff from Forex Trading Unlocked, and we are here on July 6th for a midweek Forex analysis for you. We have a lot of things happening since the markets opened up on this short holiday week. It's been quite the volatile time, if you will. Alright, so the first thing we got to do before we get into anything is show you our disclaimer, just to remind you that this is for illustrative and educational purposes only. Everything we talk about, just remember, is in delay, so please do not try and follow trades that are on or the ideas. Make sure you have a plan already. Don't just start following willy-nilly what we have going on. Alright, so with that being said, we got to get one more order of business done. If you haven't already hit that subscribe button on Twitch or on YouTube, please do so, and also like and share it with all of your friends out there. We would appreciate it. And when you get time, check out on either Amazon.com or on Forex-Trading-Unlocked.com the book High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle versions. Alright, so we are here today, and I guess we got a little bit of I forgot to turn the light on. Maybe this will have you see me a little bit better. Okay, alright, so that is so bright. I hate this light. Gotta get a new one. Alright, so I have the Forex-Trading-Unlocked.com website pulled up today. And I just want to remind you, if you are watching us on Twitch or on YouTube, that in the chat section, please leave any questions, comments, criticisms, or whatever, and let us know what you're trading right now. Questions, comments, criticisms, questions about that, or whatever, we will cover that. Let us know what you're trading right now. Questions, comments, criticisms, questions. We have a little bit of feedback going on here. Sorry, folks. Comments, criticisms, questions. We have a little bit of feedback going on here. Sorry, folks. Comments, criticisms, questions. We have a little bit of feedback going on here. Sorry, folks. Sorry, guys. Feedback going on here. Sorry, folks. Just a minute. Sorry, guys. Feedback going on here. Sorry, folks. Just a minute. Alright. Bear with me, folks. We got this feedback loop going on. I don't know where it is coming from. But bear with me, folks. We got this feedback loop going on. I don't know where it is coming from. Maybe it's here. But bear with me, folks. We got this. There we go. I found it. All right. We really appreciate you guys hanging on and bearing with us right there. All right. So for all of you out there in Twitch and YouTube, we are now getting back to our show. We had a little problem there with the feedback loop. Now we should be doing all right. Okay, so if any of you guys have problems with the audio or video, please leave a comment in the chat and we will adjust it. All right, so we have the Forex-Trading-Unlocked.com website pulled up. You all know that there's a Fed meeting today. Dollar index broke out big to the upside yesterday, following through on a big bond move as well. We've had a lot of divergence where some of the main fundamentals that have been driving the trend for the US dollar have actually gone the other way, so, and in a radical way. So we have a Fed chairman coming out with the minutes today. We'll see what they say. I would expect that we're not going to see very much of a change in the speak, if you will. It's very likely that most of what they're going to talk about today is going to be pretty much centered around the next interest rate hike, a couple of the economic numbers that have been released, what they'll be watching. It would be really a surprise if we were to hear anything from them that would say, like, hey, we are going to restrict our raising policy for probably, the next couple of meetings, if you will, to see how things are going. I don't think that's how it's going to happen. The Fed was late to the game, and with raising interest rates, way late, so they can't just all of a sudden flip-flop again. I think they're going to have to go keep this hardcore push going on. It's very likely that it's going to last, probably, I would say, into October. Maybe if we're going to see some sort of relaxing on the interest rate raising, we'll see either of them go from 3/4 points to quarter points, or maybe come October, after October, November, maybe they'll say, hey, we're going to pause for the holidays and see how the numbers are adding up. I mean, the reality is we have hit a recession. Anyone that doesn't believe that hasn't been around, that's for sure. They've been in a coma for the past like 6 months to 12 months. Now the numbers are starting to reflect that. The pundits, if you will, are confirming it. Of course, there's always a lag when it comes to these confirmations. So the reality is we are probably going to have a Fed that's going to have to maintain their stance until they can confirm that that inflation is held at bay. We're going to talk about oil. We're going to talk about a whole bunch of other markets influencing the Forex currency crosses, and see exactly what they are doing and how things are panning out with us. So I want to thank you. See, we got some viewers on YouTube and Twitch. Thank you for the likes. We appreciate that. Don't forget to share this video, if you will, and let everybody else know that you're watching it and that you like this commentary that we have. And don't forget, once again, as we talk about these, if you have any questions whatsoever about the topics and the things that we do discuss on here, please do not be afraid to open up and ask any questions. Okay, it's very important that we keep the communication going, because we don't want to lose you. And this is all about educating and also talking with each other about trade setups too. That's why we are here. So, all right, we've got that covered, and just wanted to pass this on in LinkedIn real quick, which, by the way, if you guys are on LinkedIn, check out the Forex Trading Unlocked business page. There we have all kinds of posts with information and different things that we partake in as far as with other brokerage houses and exchanges. Some of the things is Forex related, some of it's futures related, but lots of great information and content. And also we have lots of things for traders, tools that we don't necessarily put out in our videos, but we do promote to the people in the industry. It's more on a professional level. So, or for those who are moving from beginning to more advanced traders. All right, so we have the dollar index. We can see that the bull move is continuing. We're going to now take a look at the euro US dollar. This is the main reason the dollar index is exploding. You can see over the past 2 sessions, it has slammed new lows. For those of you who are some of our fans on TFNN, I don't know how many of you out there watch us on TFNN.com. We're there on every Wednesday. We were there today. We spoke about, we tagged the low today, I think is, what is it, 101.66 something. 101.61. We had a downside target of 101.76, 78 area. This is in our Tiger Forex report, which you can get. It's a weekly newsletter I put out now about Forex. We would like you to check it out. Right now they're running a special. You get it's at a 25% discount. You'll be locked in permanently, grandfathered if you remain a subscriber, and you have a 30-day trial. So if you don't like it, you can get your money back within 30 days of just canceling it. So it's a nice product, and so far it's been a good response. Hopefully you can check it out. It costs you nothing. So in fact, if you want, I will post a link about that in a little bit. Okay, so right now, Euro US dollar, sell rally forecast remains. You can see how bearish this is. For all of you out there that are listening so far, any of you guys trading the Euro right now, US dollar? Are you on Twitch? Let's see, we got a couple watchers there, and we got a few on YouTube. Yeah, if you guys, any of you guys trading the Euro US dollar or any of the Euro US dollar crosses, just speak up if you have a question about any of the trends that are going on, or especially right now, how bearish is the Euro US dollar. It hit some key support today. I would be very mindful of this. We are approaching parity with the interest rates going the way that they are, which right now the interest rate quadrant is in a upside correction, meaning that rates are actually going down. Okay, so this is very interesting that as we are having a Fed minutes meeting, since the Fed did raise rates the last time, the Treasury bond market has rallied huge, absolutely huge. In fact, we're going to take a look at that right now. All right, so if you look at the Treasury bond market, here's a chart we have pulled up. We're going to pull up here. We're at 139.28. Jesus, this keeps on breaking down. So now we are right at this level right here. So if you look at this, this market has been rallying since the middle of June. So when they raised rates the last time, we've rebounded for an upside correction. We're approaching a critical level here. I would say right here around this double top area here, right around 142.27. Should we get above that, if it wasn't for the interest rate policy that we have, that would mean almost like a neutral to short-term positive change in trend for the Treasury bond market, which would mean lower rates. Lower rates would mean negative weight on the dollar. Does it make the dollar bearish? Absolutely not. But as rates are going higher and trending higher, it does help support the dollar. When rates start to fall back and trend lower, that starts to pull back on the dollar. Now, it doesn't mean that the dollar is going to go into a bear market because of the fact that the Treasury bond market takes a turn to the upside. There's a lot of other factors that we'll get into them, how much bearing they have on the market. Sometimes oil has a big influence on a lot of the currency crosses. You have oil, you have other commodities, you have other markets, but definitely interest rates are one of the key influencers, but not the only things. But be mindful of the fact that we topped out yesterday here. Let's see what the high was in the June future, or excuse me, the September futures. We topped out at 141.17. Now we're at 130. We're almost $2 lower, 2 handles. That's a big deal, considering that we're coming off a holiday market, coming into the Fed meeting, or Fed minutes, excuse me. This is just not normal behavior for that market. This is one of the now the thing is, think about this: rates are going lower, it's weakening the dollar, but the euro is completely collapsing versus the dollar. So a lot of this has to do with the fact that dollar strength is going to come back. Most people are confident that rates in the U.S. are going to go back lower, go higher in rates, meaning lower in pricing. This is very bearish for the euro US dollar, especially now that we're talking about recession. The question is, everyone's going to be watching the Fed minutes to see, is Powell going to say something that would maybe give us a reaction saying that, well, you know what, we could maybe start buying the Treasury bond market like the Bank of Japan. Oh, wait a minute. No, are any of you aware what the Fed came out with recently? They're starting to sell. They're doing quantitative selling now. So instead of quantitative easing, which is when the central banks buy their treasury markets, they're now selling. Now they just did I think it was only like $25-30 million sell-off of treasury instruments. $25 million is nothing considering they buy billions and billions and billions a month. And see, at least that's when they were floating the market. Now they're no longer floating the market. They're actually selling. In the same time, they're also raising. Okay, so this is big. So right now, we've had this big rally. The Fed is actually selling into this rally. We know that odds are they're going to raise rates again. So that means that the markets we're looking at, like the euro US dollar, it should go down to parity. Most likely, we still have a lot of room to go. The sell rally forecast remains here. So see this sell rally forecast remains? That's going nowhere. The only thing that would change that is if, say, Chairman Powell today comes out and says, for instance, once again, like I said, let's say he says we're going to start buying the treasury market again. We know they're not doing that because they just posted saying that they are going to increase their selling. So they're just dabbling as this markets are selling into the highs, which is great because they know that as they raise, they're the ones that control the rate. When they raise the rate again, boom, the treasury market's going to take out the lows from June. At the same token, that should lift the dollar, put pressure on the euro. So the euro US dollar, now how far can it go below parity? I wouldn't get ahead of ourselves. There's a lot of support that we're coming into right now. We hit our target area once again. For those of you, maybe some of you are actually some of our customers for our weekly newsletter. We hit key support. Now I think that we still are going to continue down to parity. We'll see what Powell says today. Going into 2 o'clock, until then, I don't think you're going to see much of a reaction to anything. In fact, now with the lunchtime trade, let me see what's going on here. Sorry, folks. I know you get to see me, but I got to look at all these screens so I can talk to you and tell you what's going on here. All right. So we have, right now we have summertime markets that are kind of looking like summertime markets at lunchtime because there's a Fed chairman that's going to be talking in a little bit. That's what I think is happening. It's 11:30. Remember, at 2 o'clock, so in 2.5 hours, this thing's going to start flying around. S&Ps, bonds, euros, everything is going to start to fly around, including the dollar. So get ready for that. This is the calm before the storm. I wouldn't count out the fact that we may still make new lows today. If we make new lows today, that would be a very, 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 very bearish indication for the euro US dollar. You'll probably see follow through going on into, I would say, the next couple of sessions, and especially if you see the interest rates continue to sell off the way they are doing, well, that means that the dollar strength is going to come roaring back. So since we're already on our lows with that one variable holding back the dollar, I think we're going to see accelerated selling. So it's going to be very interesting to see how much volatility we have around 2 o'clock. And if they start pounding new lows, that could get really nasty. We may see parity today. Another market where you're going to start to see some action will be in the Swiss, but we're going to first talk about the British pound US dollar. So British pound US dollar, we're going to pull that one up right now. This one, as you can see, made a lower move low today, not as significant as what is going on with the other currencies right now, especially like the Swiss and also the the euro US dollar. The euro, remember, is the biggest component in the dollar index. That's why the dollar index looks so extreme as it's making these highs, because the other markets have been also falling against the dollar, but not as significantly as what we've seen so far with the euro US dollar. Very impressive trade over the past couple of sessions. I would just remember to be mindful of what is going on here. It's very important that you just pay attention to the next couple of sessions, because between the Fed and where oil goes and interest rates go over the next couple of days, if they start to reverse the current corrections that they are in, it's probably going to be an accelerated move. So I think we're going to have a nice ability to catch a lot of trend action over the next few sessions after 2 o'clock today. So don't get ahead of ourselves. We want to wait until that's over. We're probably going to see a lot of gyrating over the next hour and a half, and especially come around 1:30 Central Standard Time. So that's 2:30 New York time. That's when I believe you're going to have the most bang for your buck, if you will. All right, so British pound US dollar. The key high here of 124.03. This is something that we need to breach that resistance in order for us to have any significant chance of holding a rally. Sorry, I'm just looking to see if, hey, we do have some questions here on Twitch. Let's see, and also on YouTube. Is continue for follow? Yes. Yes. Horoman on YouTube, he wanted to know, is the euro going to continue to fall? I believe so, especially if we see a big bounce in oil and we see a sell-off in the interest rate quadrant in the U.S., that is going to accelerate the decline in the euro U.S. dollar and the euro versus other, like the euro yen. The euro is weak against most currencies right now. They're not defending their currency. Doesn't mean they're not going to, but I think that what's going to happen is first they got to get below parity, maybe settle below parity, and then we'll see what kind of intervention the ECB may come out with. But right now they're buying their treasury. They're still using quantitative easing over there. So the talk of raising rates is there, but right now it's going to be very ineffective. So, all right, so we have that. Let's go back to Twitch. All right, here we go. Hey, what's up, bro? I'm here looking for signals. I'm a quiet beginner with little knowledge. All right, you're scalping, looking for a scalping signal. All right, so here's a good one here. We have a good comment on Twitch. We got a young beginning trader who's trying to find a good scalp. Be very careful out there. Scalping is something that is definitely for the most advanced traders. You got to maintain, your discipline, your emotions, and you have to take it for what it is. There's a lot of noise. You cannot fight the algos. If you're looking to scalp on the 1 minute, the 5 minute, and the 15 minute bars, it's a very tough trade, and especially the smaller time frames that you get into, it's just so much noise and erratic moves that it's just algo stuff. It's not big enough to define true support and resistance at any given moment in time. So I am not telling you to not try and scalp the markets. If you are, here's the other thing too, is that when you're scalping on a short time frame, say for instance the 5 minute chart, and this is a very good comment to bring up here for what is this, Theo Fotis on Twitch. Theo, I wonder if your name's Theodore, just like mine. So got a couple of Teds here today. So for those of you that are listening on Twitch and YouTube, we have the question, made the comment about, he's a beginner looking for signals to scalp. If you have a very consistent system for picking buy and sells in intraday short time frames, I'm not saying don't trade those. Here's the one problem with it. Let's say that you back test or you have something that seems to be consistently fairly profitable enough to give you a reason to trade on most days. You're going to have a couple of problems that you need to solve before you scalp. You need the fastest connectivity you possibly can. So I don't know if you're trading cryptos or FX, what your broker is, and when you're trading as a beginning trader, you don't have total direct connection. Remember that your data is coming into your computer wherever you are. Okay, so whatever your internet speed connection is there, you're already vulnerable to how fast your data can come in, you're crunching stuff, and then sending it back out. So no matter what, you're always in a delay, but when you have those lags between your internet connection, then there's your broker that has filters and security issues and connective variables that like help them to, one, prevent hacking, and also help to produce good order flow and for you as far as data in and data out and getting your trades off. So you, as a beginning trader, probably are not using the most advanced platform. You don't have direct market access, DMA, in which case then you can scalp a little bit easier. The mere fact is that it's not that just that you're giving up the edge from being off the floor, being on the computer, no matter where you are. It's the fact that you're always in a lag. So you're going to get trades off where you're, especially market orders, where you're not going to get filled at those prices that you're seeing. You're going to either be buying higher, you're always paying the ask and selling the bid, but you're going to be catching moves where you're definitely paying higher in price versus, and also selling lower in price than you normally would be. And I don't want to see, I'm not going to discourage you. You want to scalp intraday, I'm not going to discourage you from doing that, but I would be very mindful of that. You need to have a very high probability of success on your trades, meaning that you better be making like 7 out of 10 winners. I mean, if you remotely are at like 5 to even 50-50 or 60-40 as far as winners to losers, it's going to be really tough to hit. You're going to get very frustrated, and I just don't want you to fall. These are traps that can happen. Then there's also the fact that the money management issues. When I look for a trade, and when I tell everybody, whether it's a short-term or a long-term trade, your reward-to-risk ratio is very crucial. The higher out your timelines are, the more likely your probability of success is on any given trade. And then your reward-to-risk ratio is higher as well. So, for instance, if you're scalping, not only do you have to make money 7 out of 10 times, your reward-to-risk ratio has to be a minimal of 2 to 1, but usually 3 to 1, especially on the tighter time frames. When you go wider out because you're giving more, laying more risk and expecting more profit, you have a little more room, but you lose that when you're trading the way you're trading right now. And once again, I'm not trying to discourage you or shy you away from trading intraday. And fantastic question. So for those of you that are beginning traders, take that to heart. If instead of trading intraday, trade the daily or the hourly at the shortest time frame, and then make sure that whatever your system is for your entry points, that you're looking for a 3 to 5 times your reward to risk. So if you're risking 1, you want to make 3 to 5. That's your goal, at least. Okay, and then if you have a probability of being right 6 or 7 times out of 10. Also, that helps to ensure the fact that no matter what happens over time, you are most likely to make money, and that's what we're all here for. Remember, trading is a business; it is not gambling. Do not treat trading as gambling. I promise you, you will lose money. Okay. Let's see. Continue. All right, we got the nice little remark there, and thanks for the interest there, Romano on YouTube. We always appreciate anyone who puts the chats down. Even if you just say hi, it helps us with the algos. And also leave a comment in the comment section. Also, it totally helps us for our views on YouTube. It gives us more motivation to create videos on a more consistent basis. We don't just put out videos to just put out videos, though. We do it when markets are hopping, when you have opportunity, which we're going to talk about some potential trades that are setting up. Okay, so now let's get back to, since we answered those questions, let's move on to the British pound US dollar and finish this up. So as we're probing these lows right here, you can see it's not as damaging. It is helping to push the dollar index higher. The pound is the number 2 weight in the dollar index. We have a nice downward sloping resistance line keeping the channel intact. Now if you look at this line, it's pretty much a 45-degree angle. For those of you who don't know anything about Gann analysis or Fibonacci analysis, 50% is a big deal. 45 is 50% of which would be your right angle. For any trend to maintain in I would say a happy medium, you want it to stay pretty much along that slope of 45. Now we'll have spikes where it gets really steep in slope, short term to the upside, or down conversely to the downside. But overall, if you're maintaining that 50%, 45-degree angle, if you will, channeling off of that line, that's really a solid trend. Now, it could be a couple degrees off, so don't lock in at 45%. But you understand, I think, what I'm saying is that slope, it's not too severe. I mean, markets tend to go out like they come in. So for instance, like here, look at the sell-off. Boom, 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 boom. Look at this volatility. You see the reaction. It was a corrective move, so the trend still stays intact. It's a rally to sell. But when it bounced, it came back really, really fierce. Okay? The same thing is here. You see how it slowly is still being volatile, and then we have this correction here. It has the same type of momentum before it falls off again. Obviously, it fails because the trend is lower move lows, lower move highs, so your corrections are not as big. Sometimes you do have some of your biggest corrective moves in an opposite, in any trend. But when you have a solid trend, especially like what we're looking at here with this 45-degree slope, very, very good. It maintains a posture that is very maintainable as far as the trend. To reverse that trend, you need outside influences. In this case, we would need a here's the other thing. We would need a continuation of the interest rate rally, which we now see is coming off of its top. And this is another significant thing too. Yesterday, remember I said the interest rate quadrant rallied really big, and they had follow through today. Obviously, they're coming off of those highs now. It sold off big yesterday, and then it slowed down. Of the European currencies, the pound is relatively the strongest versus the dollar. Remember, there was Brexit. We talked about Brexit throughout the news and on my videos and my interviews on other stations and stuff, that how important it was that not only did the UK regain its sovereignty fully, it no longer has the woes economically as the EU. It doesn't have to contribute to them. It's up to them if they want to bail them out or do anything in cohesion with them. So, and that's a big deal because the European economy is collapsing. Literally, their economic numbers are way, way, way worse than ours. They are definitely pushing the trend lower. Odds are that, 6 months from now, things are not. This winter is going to be a cold, rough winter in Europe, and I am not making light of this. I am just being 100% honest with you. If what's going on right now between Russia and the Ukraine, the collateral damage of the sanctions that they're imposing, nothing is hurting Russia, but it's certainly hurting the EU. The lockdowns were the first dumb thing the whole world did. Life doesn't stop. You can't shut everything down. That created supply shortages, supply chain issues. We have things that cannot go back online, have not gone back online. Then we have the mandates where people can't go back to work that are willing to go back to work, but they don't get the jab, and you can't force medical treatment on people. When that restricts the workforce that we need. That's why we have a problem in the travel agency industry, medical industry, especially in the United States. They say they can't find help, and there's nobody wants to work in the airlines and in the medical services industry. Well, there's plenty of people that want to. You just won't let them come back to work. So, and as long as those restrictions are there, these economies are going to be weaker and weaker and weaker and weaker and weaker still. It's happening in the U.S. We can absorb this much quicker, or excuse me, not much quicker, much easier. We are still sliding. don't think that the dollar is really strong. The dollar's not strong at all. The dollar is incredibly weak. This is how weak these other currencies are. Their countries are collapsing, their governments are collapsing, their economies are collapsing. You watch over the next 3 to 6 months what goes on in Europe, and you will be stunned, absolutely stunned. And in fact, I wouldn't even doubt it if by the end of the year, Germany possibly seceding from the EU could be on the table. And if that happens, guess what? The D-Mark comes back, the euro will collapse completely. There's no strength to be there. The ECB is out of bullets. They have no strength left. They've been buying. Quantitative easing, the collateral damage of that is now showing itself. They ran out of money. They print more money, they're going to create more inflation. The sanctions on Russia are also sanctions on Germany and all the other countries in the EU, because they're one of the biggest exporters is that they are countries they export to from throughout the EU is Russia. So, that's going to be continue to be a problem and maintain these negative trends. Okay, so very interesting times here. We can capitalize off this for transparency's sake. I've been, just to let you know, I've been on the train here as far as being long the U.S. dollar Swiss, which we're going to get to next. The euro U.S. dollar, I have been short a lot. I got out of it last week when it was starting to continuing to chop around. I did not see this sell-off happen. What happened after the 4th? It had started over the 4th of July weekend while U.S. markets were closed, and then now, bam. So as far as lows, we're targeting $1.1660. Can we get down there? I think as long as we close below this last key pivot line, we can end up down there. Only a breakout of $1.2403 would have us targeting this critical upside breakout area of $1.2504 up to $1.2645. Once again, don't see that happening to the upside. Very, very, very unlikely. Okay, so let's see where we are at now. Okay, we got that. We got those questions answered. Very good. All right, so now we're going on the U.S. dollar switch. For transparency's sake, I want you to know that I am long the U.S. dollar Swiss. All right, so we have critical support by the swing low from a week and a half ago. Very interesting to see whether or not that is going to maintain as the long-term low. I think it will, especially if we see the sell-off in the interest rates. This upside corrective zone here at 97.71 up to 98.39, I could see this being a good stalling area where over the next few sessions we continue to rally towards that area, but I don't think we're going to have like just a radical move that goes through this. Where the euro is crashing towards parity, I believe that the euro's got a better chance of hitting parity before the U.S. dollar Swiss does, but I see both contracts as being at that level over the next couple of months. For those of you that watch our videos from months on, I've been giving you these targets. Called the parity rally already from months before this hit the last 2 times. Overall, there's a big reason for the Swiss to be above parity. Because of the pullback in oil especially and the rally in the interest rate quadrant in the United States, that's one of the reasons why I think you've been holding this support area. But now, even if oil stays stable, we know the U.S. interest rates are not going to stay in a trend of going lower. This is a corrective move in the reduction of rates right now. The market itself, once the Fed raises it, it's going to push it no matter what. So the ceiling is being lowered, and right now it's just easier to reach it, and it's trying to, but it's going to get pushed down, and once it hits, like it probably already did today, I wouldn't doubt today's a very good day for, and I'm not trying to pick a top or a bottom, you should never do it. Today's a very good day for the turn to have occurred in the interest rate market, and if that's the case, we should see an acceleration. This may even happen today, where we tag this 97.71. So after 2 p.m. Central Standard Time, when Chairman Powell is speaking later on today, it's very, very likely that you're going to see this kind of market action. We will, I would say that the volatility factor of what's going to go on, I don't think it's going to be like a major unemployment event. Remember, this is not a Fed meeting. They're not raising rates at this point in time during this meeting. There's no reason for you to think like, oh geez, this is the beginning of the end of the world. But I do think that if Powell sticks on his verbiage the way he has been, nothing changes. Let's look at where the interest rates are right now. So just to see now, look at this. So on the CME site, now futures are always in a lag. They are now down over $1, a full basis handle, and nine ticks. Remember, ticks are pips in futures vernacular. So 139.28. That now puts us right here. One more tick. There you go. Always leave it right there. The 29. It's hard to get that. So here's where we are. If you think about this, we fell just shy of breaking out to the upside. Now we are $1 lower on the day. This is going in to the Fed speak. Remember, interest rates go down, interest rate products go down, the rates go up. That means also support to the dollar. So the dollar's already been strong. This follow through today that we could get, that could be enough for us to have a day like yesterday, which what would that do? That would have us just tag this upside corrective zone. So let's see if we have any questions out there about the US dollar Swiss. We have none on YouTube, none on Twitch, but we do have a lot of viewers out there. Thanks. Wow, we got a lot of people on YouTube watching today. Thanks for all of you out there. Please, any of you that have just joined in, oh, we got a nice comment on YouTube. Sweet. If any of you that haven't done so already, make sure you hit that subscribe button on YouTube and also on Twitch. And like it and share it also. And don't forget to leave comments in the comment system. All right, so let's see. We have Black Sheep is coming back stronger. But what did you? And now they're holding the V2 launch. Proven team works very hard. This will blow up. Get your spot. Okay. All right, well, nice comment on YouTube. That's, yeah, we'll look for that on the 6th. Absolutely. That would be later on today that they're talking about. So, yeah, at 3 p.m. UTC. Yeah, so that would be on your time. Yep, we're watching that time frame. Absolutely, 2 o'clock Chicago time. It's going to be, I think, it's not going to be a non-event, but like I said, if we're right as far as how the speak has been going, their actions have been going, with the way we've had this turn now and this accelerated volatility over the past couple of days, I like it. I think that we'll see dollar strength come into the market, and it's very, very likely that we could see a big sell-off once again. And I mean, the euro US dollar is on its lows right now, or near it, so we could see that push. Now, I don't know if the euro is going to hit parity today, folks. Let's not get ahead of ourselves. It's heading there, I believe so, but not necessarily today. But for us to see in the Swiss, we're at 97.13. You're looking at a 60 pip rally potential from where the market's trading at right now. Once again, we're not trying to encourage anybody to buy or sell the market whatsoever, but we are poised in this situation right now for this market to do so. All right, let's see what we got going on here. All right, so that's that. All right, so we have the US dollar Swiss. We're looking for a big rally. Now, the one thing that could throw everything off is if we fall below this low here from a couple weeks ago. Then we have a target of 92.44 to the downside. Once again, I don't see that happening. The only thing I could see that would really, so if the Swiss raise their rates, if oil continues to slide, let's say another $10 and gets down to like 85 to even $20, that would be a big, huge thing for the US dollar Swiss, which would be bearish in the short run, adding to a banging of support. I don't see any of those situations happening. Maybe the Swiss raise rates, but not significantly enough, I think, to make a difference. So we'll see what happens. But like I said, I don't see that kind of action happening. So, but what I do see is a continuing of momentum to the upside. Remember, the overall trend is a bull, higher move highs and higher move lows. This is what it is. Now, it's been a big sideways for the past couple of months, obviously. Like I said, I got a feeling that today, or over the next couple of sessions, especially as the bonds and the 10-year sell off, that we should get into this area here. I would expect a little consolidation. Now, if we do get above 98.39, when I say fresh buying is likely here, odds are that all of your weak shorts will start to scramble there, because once you get to that 98.40 area, you're pretty close to parity. And I don't think you're going to have a lot of your weak sellers coming in to jump in on that. So I think you have a lot of stops that'll be buy stops that'll be in the market there for anyone that's short, especially from here up into this corrective zone. Anyone that's trying to sell into this area here, unless we're totally wrong, like I said, I think it'll be a little congestion where anyone that's buying or starts selling into here, you may have a little time where it chops around, doesn't totally go against you right away, but then eventually it's going to tag and go up higher. And especially if we see a rebound in oil, you see oil get back above 105, 110, let alone if we do see a follow through in the interest rate quadrant in the U.S., that would be, in fact, let's take a look at it right now. Okay, now they're down, 109. Yeah, so they're still holding right there. Then that would aid that would help to have that happen. All right, so we have another question here. Shaquille, are you entering trades? I'm hearing the sound. Yes, I am, but that's not what you can see. So I was taking profits in the U.S. dollar Swiss and in the U.S. dollar yen. It's been sitting there. Because we're getting closer to 2 o'clock, I am decreasing my position. So right now I am long U.S. dollar Swiss, and I'm also long the U.S. dollar yen for transparency's sake. Very good ears there, Shaquille. Yes. Now, me being long does not mean that you should be long. Okay, I've been long the U.S. dollar Swiss for a week. I've been long the U.S. dollar yen pretty much net for the last 8 months. So what I'm doing right now, because of we're going into this meeting at 1:15 New York time, 2:15 Chicago time, is that because there's going to be so much volatility, they could both be skewing all over the place. I would rather forego a little bit of profit right now, because if it goes up, all I do is make a little less money. And if it comes back, I have a buying opportunity, because the only way I would get out of these trades, and I do have for the yen, and we're going to get to that one, I do have a level where I would be flat the yen, because you will see what I mean when we get to that. We're about to get there. Good deal, Shaquille. Great ears, and that's a great lead up for the next market. So, okay, once again, we're going to finish up with this. If the fresh buying comes in, obviously critical resistance here at the last high is going to be where we're going to be looking to breach. Remember, markets break down and they rally up, so you don't break out. You break out to the upside. You don't break up. You breach. So, but parity 0210 is our longer-term upside target. Boy, would that be nice if we can get a rally up to there over the next 5 to 10 sessions. So, and that, even if I shave my position, and here's the other thing, this is where money management comes into. Pay attention. I'm shaving off my position. If it goes, I'm still making money. I have an opportunity to either bail or also buy in and get the longer term trade for both the U.S. dollar and the U.S. dollar Swiss and U.S. dollar yen. So we'll see what happens. So all of you that are watching this video, we will be talking about it later. And who knows? Maybe we'll pop back in and do a surprise video later on this afternoon. Would you guys like that? Leave some comments. Excuse me. So, I don't know. We'll definitely be having one tomorrow. All right, cool. So we got some good viewers here on Twitch and YouTube. Thanks again for the likes. Don't forget to hit subscribe if you haven't done so. And now let's talk about the U.S. dollar JPY. This is the one that's been a struggle today. All right, so what do we have going on here? We have a lot of interesting things here. So of all of you out there that are listening on YouTube and Twitch, if you could just say aye, yes, how many of you guys are trading the U.S. dollar yen? It's a fantastic trade lately, I'll tell you what. It's amazing. We had the Bank of Japan and their finance ministry talk about protecting their currency. Obviously, that's something they just completely forgot about. I don't understand, because I thought that once it got above 130, you can see BOJ, U.S. dollar JPY target price level. That was their target price. If it got up to that they would do intervention. Now we're $7 almost, no, excuse me, $5 higher. And we've been trading up here for weeks and nothing has been done. Maybe they're, because of the aggressive stance with the Fed, they're waiting a little while longer. One of the good things that in the short run is happening, It's just kind of interesting. I heard somebody talk about this earlier. There's people that are, because they're long gold in U.S. dollar, yen, and some other currencies, they're making money. Well, it's actually because you're long the dollar. You're not really long gold when you're short the yen and long. You're short the yen, long, or excuse me, long the yen, long gold. So you're really long the dollar there. So the U.S. dollar yen, until they do something, there is just no reason in the world to think that they are going to have any type of real intervention. But today could be the really good day for something like that to happen. Reason being, we have a shoulder here, we have a head here, and if you look at this, we have this nice little neckline. We tagged this today. So after yesterday, we traded all the way down here, and now we've been hanging around unchanged on the day. It just is this market going to puke and all of a sudden break out to the downside? Which, if it does, we could get a nice slide. The problem is that the only factor right now that's helping the U.S. dollar yen hold or look like it's bearish is the fact that crude oil is down a lot. So speaking of crude oil, let's see, we have 96.25 was where it was at when I started the. We're on the CME site here. We'll click on the energy here. Let's see where they're at. So 96.57. They rallied a little bit. So we've made newer lows on the day. This is one of the things I think that's holding back the U.S. dollar yen is that weaker oil, while the dollar is strong and the yen is obviously weak, since the interest rates variable is where it's at, that's keeping the yen back, if you will. It's giving the yen strength. So the weak interest rates in the U.S. is giving strength to the Japanese yen. Crude oil, correcting like it has also, is doing the same thing for them. It's helping out with as far as maintaining that posture here where it's at. If we were to see the bonds rally, let's say that whatever Chairman Powell says today gets them all excited, and they're like, okay, we're not going to do a 3/4. And here's, let's say that something leans towards, we're still going to raise rates, just not as aggressively. Well, then 3/4 points is off the table. 3/4 points over the next couple sessions is already factored into the market. So if he was to even just remotely give something like that, you could see where we would all of a sudden this market would take out this neckline, probably, and then the key is also this here, 134.23. If we fail here, good chance we're coming down to the critical support area into this area here, where we'd be coming off a higher move high and making lower move lows. Remember, we're coming off a higher move high. We made a higher move low. The trend is still a bull. Okay, so I'm not telling anyone to get short anything. Right now, if we take all this out and settle, it has to settle down there also, then you have a confirmation of a head and shoulders, which would mean a short-term sell signal for the U.S. dollar, Japanese yen, and that would have it projecting also down below this 134.23 area, somewhere towards this critical support level of 131.76. I think it's going to get dicey. I don't know so much how easy it's going to be to get down there. So what I would do is take this last swing low and then this swing high right here, and let's see where we have for 50% level. So we have, see, the 50% is right on that. So we're going to put that right there, make that yellow, just a little bit above it, and then we have the 0.618. So you can see that this little area here, if we take out that low, this is like the last line of support here. But it's very easy for us, since it's a head and shoulders pattern, to take this out. Another thing here is we also had a bearish signal last week where this head, the next day right there, see this little red sell-off day right there? That's a bearish engulfing line. Okay, that is a short-term sell signal. That has the market targeting this little spot right here. Does that mean it's going to be able to do it? The momentum of this trade, remember, this is a counter trend trade right now. This market's making higher move highs, higher move lows all across the board. Okay, so that means this is a solid bull. Sell off down in this area is a short-term sell signal. This might be about what you can manage, you know. If we fell below 133.63, let alone settle down here, well, then I could see us grinding around and maybe flirting with a dip into this area before we round back up and start to challenge resistance. Also, the closer we get down to this area of 130, less likely the Bank of Japan is going to do anything. If they didn't do anything at 137, why are they going to do something at 133? If anything, they'll wait to see if the market can readjust and, somehow recoup itself. So we'll see how that goes. Like I said, I think that overall we're more likely to make a breakout to the upside, and 140.25 is the expectation. So I know that seems a little crazy, but once again, without the BOJ interfering, and here's the thing is, let's say we have this big bond sell-off. We've had such a rally with the dollar, with a rally in the bonds. If the bonds in the 10-year sell off in a big way, that's going to give a lift to the upside momentum of the dollar, and it's going to really show weakness against the other currencies. And I believe that you will not only take out this high, 137 to 140.25, you're looking at a three-handle move there, $3 move. Could very easily happen, and especially if you look at where we're at here, 135 to 140, you're looking at a risk or a reward ratio of 5 handles, 4 to 5 handles. Okay, remember when we talked about risk reward ratio? Well, I have my stop in here, and I'm going to put this in black. That's my stop. If we take out this neckline and this low, the head and shoulders pattern is triggered. I will no longer have a trade on in the US dollar yen after that's triggered, at least in the short run. Okay, so here's you know where I'm long, you know where my stop is, and you know what I'm looking for to the upside is an extension of profits. That's why I don't mind taking off like I'm doing right now, shaving some yen here and some Swiss there, because if the market sells off, well, I don't have much to the downside in the US dollar yen. I've realized already a nice trade. And if this sell signal, remember, we already have one sell signal here that's targeting this area. If it comes down in this area, it signals a second sell signal. So then we have, and now this goes out to you. Who was it who was asking about the signals for intraday? Are you still there, Harman? We're talking about signals here where we have one sell signal, and now we have another one where, as of today, if we get a close that is weak enough, we will set off a head and shoulders sell pattern, and that head and shoulders sell pattern will confirm our weakness. Okay, so, and that also extends our potential to the downside. And remember, it's a corrective move. So once it gets down in these areas, I'm going to be looking to buy back. So, and I'm not telling you should get short right now. Don't get in front of a trade. And once that sell signal is triggered, you got to know how to manage that. So if you don't know how to manage that, if you haven't read my book, High Probable Japanese Candlestick Patterns, which, by the way, since you guys are here, at forex-trading-unlock.com, you go to the products, courses, and service. You go down here to High Probable Japanese Candlestick Patterns, and it'll pull up a page where there's a video on the book. You can also preview, share, or buy it. Of course, we'd appreciate it if you buy it. But you can check it out a little bit. And if you're a Kindle Prime user, you can just read the book. You don't even have to buy it. So we get paid for you just reading the thing, which would be nice, but we'd prefer if you buy it, obviously. So, and tell all your friends as well. So, but yeah, US dollar yen, we know our upside, you know our downside. Let's see if we have any questions about the US dollar yen here. All right, we got a lot of viewers here on YouTube and on Twitch today. We're really happy about that. Thanks, guys. So we have our signals for that. Now let's talk about the Australian dollar, US dollar. This one's been in a negative way, playing with these lows, flirting with support. If we get a correction, I think you're going to run out of gas somewhere between 169.14, or excuse me, 69.14 up to 69.50 in this area. I doubt we're going to take out this downward sloping resistance line. If we do, then perhaps we could get up towards this 70.23 to 70.86 area. Right now, with those factors that we've been talking about, I think you're more likely to see lows getting slammed today than anything else. I don't see that there's the potential really for the most part in this trade. Not that it's not there. I just don't want to catch a falling knife here. I think if you're If you want to buy this market, I mean, obviously you got a low risk against the lows. I wouldn't want to be long below these lows, and it could just chop around there. It's grinding lower. I'm not looking for the biggest sell-off in the Australian dollar, US dollar. I'm in a sell rally posture, and I'm looking for the trend to continue. I think if we take out, especially today with this meeting or with the Fed minutes, if we can close below 60, basically where we're at, or the low of 67.63, well, then I can see us with a longer-term downside target of 65.88. I don't see it slamming, though. I see it grinding lower. I would use caution, and I would look to sell rallies instead of buying breaks. We are making lower move lows, lower move highs. There is not a sign in the world right now saying buy me, okay? And if you do, you're taking a counter trend move and you're trying to pick a bottom. Don't do that. Just telling you, it's a bad habit. It will cost you money, and over time you're going to lose. Hey, thanks for the thumbs up there. Appreciate that, man. Glad you got something out of that comment. See, this is why we encourage you to ask questions, because just with the people that have interacted so far with us today, you'd be surprised what it brings out, and also the question gets answered. You learn something. That's what we're all here for, right? Makes us all a better trader. Makes you a better trader. Makes me a better trader. I learn still all the time. Anyone that says that they're through learning anything about trading, well, they're lying. That's for sure, because I've been doing this since 1989. I've been in the business. I've been trading since 1990, and just had my 32-year anniversary as actually trading markets, not just being in the industry. I learn stuff all the time, and markets are always evolving. So to think that whatever you know now is all you need to know, and that's all you're ever going to need to know, well, it's like anything else in life. Don't be that obtuse. Life is always changing, and there's a lot of things that are static and you need to know will never change. But there's a lot of things. Life was always throwing you all kinds of curveballs. It's a great thing about the markets, right? It keeps us entertained, keeps us all definitely involved. All right, so Australian dollar, that's our downside target. You got the resistance there. I'm not looking for anything. You can see more red bars on this. And this is the thing, is this trend here, pretty solid slope here. Remember the 45-degree angle we were talking about before? This is pretty much the same difference. Look at how nice these corrections bounce back, and then here we go. Could we get a correction? But yeah, of course we could. We're going to get one eventually. But that's where these price resistance levels, they start to become harder and harder to reach. Anything below this downward sloping resistance line, I think, is out of play for now. For now, I think that's the scenario. All right, we have two more Forex pairs to take care of, and then we're going to get to crypto. I know some of you are wondering, when is he ever going to get to the crypto, because that's what you guys are here for. So yes, keep us on our toes. Yeah, oh, here we got, was it Snot Noster Boil? Yay, that's a nice name there. I like that one. It's pretty creative. Yeah, keep us on our toes. Yeah, exactly. That's exactly what the markets do. All right, New Zealand dollar, US dollar, very similar posture. It's riding its lows. This one, I don't really think you have even a chance in any reason right now of getting up to the 63.98 high area. We have 63.52 up to 64.13 as our upside corrective zone. I don't think we're going to reach that. Reason being is this downward sloping resistance line is very similar to the Australian dollar. New Zealand has so many more problems than Australia does, and this is where it comes into place, where the collateral damage that's been done over the past 2 years, and especially the last year and a half, is all coming to roost. It's all coming, and they're not letting up in New Zealand. They're actually making more COVID restrictions, they're getting in their own way is what they're doing. So, and my prediction is that even if we see a bounce, let's say we start to see a big dollar sell-off, and you start to see the Australian dollar, the euro, the pound, all rally against the dollar. You see even the US dollar, yen fall and start breaking through the floor, and yen strength come roaring back. And especially in that area of the world, you see yen strength, you see, God forbid, won strength. But then all of a sudden, we get to Australia, New Zealand dollar. They kind of trade in tandem for the most part as far as trends. They don't trend tick for tick or anything like that. But I think you're going to see, as one turns, the other one's going to keep going down, meaning that Australian dollar, US dollar, when they either start to consolidate and base, whether they do set up a rally or just hold into a range trade, New Zealand dollar, US dollar, I see continuing to collapse. It wouldn't be any surprise to me if we see the New Zealand dollar, US dollar, every bit of 20% lower than it is right now at the end of the year. There is not a doubt in my mind that wherever the other currencies go, New Zealand dollar, at least I see getting down to, I would say, the 55 to 54 half area. And that's just in the short run. I see that happening sometime between now and the end of the third quarter. As far as beyond the third quarter, moving into the fourth quarter and into 2023, I could see us trading in the 50 handle. So that's more than $10 lower than where it's at right now. And this is regardless of what happens with any of the other currencies, regardless whatsoever. I wonder if any of you guys trade New Zealand dollar. That's usually a specialty one. Hey, here we go. We got another comment here from Teresa. All of the pairs with US dollar look very bearish. Yes, they do. You got a very good observation there. And Teresa, right now, obviously, on any given day, certain markets will be bullish and some will be bearish. Be careful with the Fed minutes today and the market action, but you are right. Overall, most currency crosses are very bearish versus the US dollar. Now, one of the main reasons, and I've said this over and over and over, and I can't impose this enough on you, is it's not that the US dollar is so strong, it's that these currencies are that weak. So when you watch like our economic numbers, be mindful of these other countries. Like if you're trading, for instance, the Australian dollar or the euro or the pound, whatever, you need to pay attention to what's going on in their economies. The UK is fledgling. No longer being part of the EU means it's not as weak as those other European currencies. And situations like that, you watch like what the numbers in the, let's say the economic numbers like for CPI or PPI equivalents in the EU and the UK continue to trend negatively just like they are in the US. The euro is more likely to get impacted more from that than the UK is. Multiple reasons, because one, they're sovereign now, they're no longer a part of the EU. Two, they also are not energy dependent, whereas almost every country in the EU is energy dependent, you know. So, but yeah, very good observation. All the pairs with the US dollar look bearish. Yes, you are right on the money there, Teresa. Thank you for your input, and yes, I am in support of you as well on that outlook. Excuse me. And I don't see that to change anytime soon. Now, anything can happen, Teresa, but right now, key off those interest rates. If they do start to sell off again, and unless there's some really big news that Powell comes out with today, and like I said, I can't imagine what it is. Let's see, US dollar Dixie does not stop going up as well, and there's been an impact on the cross pairs. Yes. Okay, now here's another good one, Teresa. Thanks for bringing up the US dollar Dixie. Remember, we started out with that at the beginning of the webinar. Great input. Really appreciate you, Teresa, today. The dollar index, remember, there's different weights. You have the euro, the pound, and the yen are the three biggest weights in the dollar index. So think about this. The dollar index is so strong, what it's done over the past 2 days, yesterday especially, and even with follow through today, the euro being the biggest weight, you can see that dynamically on the chart. Like, and here's something to take a look at. Very great question. So if we look at the Dixie, you see how that is? It's trending up, making higher move highs, higher move lows. Now we go to the euro US dollar. Oops. It looks like an inverted. Now the Dixie that we had there doesn't have today's data because by law we can't put that up in real time, just like the futures. But we can do the FX. I mean, it's in a slight delay. It's not totally in real time. Remember, that's why I don't trade these things, because between your own computers, the streaming going in and out and this and that, I don't know, you're probably like 2 minutes behind everything that we're doing, or close to it. So, but the dollar index, you can see, looks a lot like the euro US dollar. It's the biggest component. Then we go to the British pound US dollar. it's been trading lows too. So that's helping to push that rally even firmer. Then we go to the US dollar JPY that's in a holding pattern today. So it's actually slightly lower. It's actually putting a lag on the dollar index. What happens now? This is great, Teresa. Dollar index, we're watching the dollar index strength. We know now where the weakest component is. If the euro and the pound still continue to pressure support, the US dollar yen is still in a condition where it can pull back. Remember, this is indicative of the oil trade and the interest rate trade and a couple other things. Whereas we could still get this sell-off here. Meanwhile, the euro and the pound are breaking, but yen gets a little boost in strength. Okay, but that's not going to be enough to even nudge the dollar index. Okay, now if the US dollar yen breaks out to the upside along with these other ones, talk about an accelerated move. And this is great that you brought up the dollar index, because you can trade the dollar index. There's multiple ways you can do it through there's ETFs, there's options, there's other you can trade it through binary options and other ways. So the dollar index is something that, don't count that out as an FX trade, especially if you're just learning the dynamics of different currency crosses. Like, don't just trade currency crosses willy-nilly. Make sure you're very familiar with the dynamics of what's going on in their economies, their economic numbers, and what have you. And in a situation like this, where, remember, we're talking about the dollar index, this thing's a bull. It's making higher move highs and higher move lows. Maybe, you never know either, if the US dollar yen sells off and this head and shoulders is completed today, maybe that puts the brakes on one currency in the dollar index. It starts to go lower. The dollar index no longer is going to rally as strong as it is. And then you got to remember that the pound and the euro are on their lows. They're going to have a bounce, okay? So we'll watch to see what happens with those currencies. But let's say that we do get the head and shoulders in the US dollar yen and what have you, then, and especially if interest rate markets are remaining higher, then I wouldn't doubt that we'll see a little pullback in the dollar index. But right now, the dollar index, it's hard to get a rate on itself. And this gets back to like the whole scalping thing. If you're using other markets as your indicator, you can scalp during the day because you're using other markets in real time that you peg off, and they're not in delay. But you can't do that when you're just trading in an individual market. What you can use for a dollar index, like I said, either use that strength or weakness as a bearing on what you're trading with the individual pair, or when these pairs start to turn, that's how you know when the dollar index is going to turn. I mean, the dollar index, no matter what, is going to have some sort of correction to the downside and have a sell-off, profit taking. So really great, Teresa. Thank you very much for your input on that one. Let's go to our last Forex pair before we get to the cryptos and any other questions, by the way. Wow, we got a good number of likes on YouTube today. Thank you very much, guys. I hope you guys are also hit that subscribe button and share button as well. Fantastic questions from you guys today. Really good session. US dollar Canada, if you've been watching our videos or get our weekly newsletter, you would have seen the levels. Boy, did it explode yesterday to the upside. I mean, this thing's been in quite the range trade. Irony of it all is it just poked a little higher high, and now it's going sideways. This market on so many levels is just a nightmare. I've been saying this now for the past few months that this is going to be a tough trade. Originally, I was bearish this market, I was bullish this market, and then I'm like, okay, what doesn't make sense is that Canada is obviously just north of the U.S., major trading partner. This is another country where they're imploding. I don't know how much longer they can maintain it. In fact, I wouldn't doubt that a country like Canada, just like New Zealand, within the next 6 to 8 months, you're going to see all kinds of default potential risk on their debt. They have grown their debts. They've more than doubled in a year and a half. So, and they're not they weren't sustainable at the levels they were before. Then you have the fact that you have the border crossing issues for trade with Canada. I mean, just when you think things are opening up and we're going to have, we do a lot of trade. A lot of things come into Canada to the U.S. and vice versa. We supply them with a lot of things that they need, and they have a lot of things that we desire as well. And that trade is all being restricted right now. It's not. It's beyond me how this really has all come out. Like all these markets have been trending. I mean, these currencies, you can't make this stuff up. How things have been lately, you know. I mean, they really have been a fantastic trade. I mean, currencies are the nice thing about currencies is currencies trend pretty much 70% of the time, depending on the currency pair you're talking about. Most markets trend only 30% of the time. So that means that most markets are noise for 70% of the time. So you got to be super right grabbing those trends during that 30% just to absorb the chop and still be profitable. That's why we love currencies so much, because as a whole they trend so strong and most of the time that it's only 30% that you can caught in your chop. The US dollar Canada, I'm not doubting that we can press the upside of our range and even the downside of our range, but if the narrative between Washington and Canada, as far as it's not even central banks, it's the policy, the foreign policy, which they're not even trying to do anything, which I just don't understand. As long as it stays this way, I don't think you're going to have. I think you're going to expect more big range trades like this, where you're going to have some wild swings. But there's no trend here. There is just no trend here at all. I mean, I can't tell you if this is going to break out to the upside and hold, or fall apart and then maintain a bear trend. There is just we're in this limbo level that really is between basically $1.25 and $1.30. I mean, with this explosive rally that we had yesterday, I mean, we were just in limbo, going nowhere, probably going to drift in here or just a little higher. But to get this momentum to the upside and then pop and be restricted like that, it just tells me that it's a ceiling there. It just cannot get through that. And until relations with Canada either get really, really bad or get really, really good, I just think we're going to see more of the same. So, all right, let's take a look at BTCUSD. All right, we're going to look at some cryptos right now. Not that we won't look at the Forex markets either again. You guys got any questions about anything, you just let me know and we'll bring it up. And even with cryptos, just tell me what symbol you want me to look at up and we'll do some analysis on it. All right, Bitcoin. Very interesting thing you guys need to pay attention to. It's very ironic that gold, as it's going down, as the stock market is going down, Bitcoin's going down. Why is that? Let's see. Bitcoin, ever since it's come out, and I got some big crypto gangbuster people out there and I'm not bashing the crypto space or getting into that at all. But one of the things I was told is that besides it going to $1 million, Bitcoin would ultimately prove itself to be the best hedge of inflation. Tell that to all the people that have bought Bitcoin anytime this year up until, I don't know, 2 weeks ago? So where the stock market hasn't totally sold off yet, it hasn't collapsed, but it's been weak and it's starting to show some really bad signs, especially because the word recession is now there. But I was told that by all these people, and a lot of them are global, they're in Europe or they're in Asia, and they're really big proponents saying that eventually there'll be no dollar, it's everything's going to be digital, and this is the future, and this is what we need, and it's going to be the only thing that's going to save people. It's going to save the middle class. Well, okay, we'll see. I don't see Bitcoin going back up to 60,000 anytime soon. So especially as gold continues to tank. See, here's the thing: is the stronger the dollar is, irony of it all, Bitcoin's getting smashed. So the dollar, according to all the crypto people, is going to disappear and is worthless and is never going to be here anymore soon. Well, okay, but right now, even though, like I said, it's not that the other currencies that the dollar is that strong, it's that everything else is that weak. Well, what do people want when obviously all the other currencies are weak, then gold is dropping and the stock market's dropping? Oh wait, the bond market, are you going to buy that? Well, that would be good over the last couple of weeks because you're in an upside correction, but overall we know the trend is going to be bearish until the Fed says they're going to stop raising rates, especially so aggressively. So with that in mind, are we basing? I don't know. We had a nice little short-term buy signal here back on June 19th. Okay, we made a lower move high. We have since made a higher move low. So here's what you got to do. If you're bullish Bitcoin, I'm with you to here. 18,700. If we take that out, that's not good. Now by attrition, we can go sideways. Okay. Right now, I think what you need to hope for is that we breach this high here. If we get above basically 22,000, that'll have us coming up towards this 24,838 to 26,765. This little area here, I think, is going to cap it. Right here. In this pocket. Now, should we trade through this downward sloping resistance line? Once again, we have a 45-degree angle, basically keeping that trend nice and intact. So could we get up to tag this line? Yes. But the more we're going out in time and the closer we get over the next couple of sessions, I think the likelihood of seeing 26,000, not that good. Likelihood of hitting 24,000, very possible. Only thing is, we got to breach the 22,000 mark first. We are trading at 20,245. We are right in the middle. So let's see what Powell says today. If Powell comes out and says anything, and especially watch the interest rate market. If you see the interest rate market selling off, the 30-year and the 10-year notes, meaning them going down, rates going up, and if we start to see the U.S. dollar rallying, you probably don't even have to look at gold to know that odds are Bitcoin will be going lower. Odds are. So if you're long right now, let's hope for a breakout above 22,000. If you're looking to buy it, I wouldn't buy it here. So if you're looking to buy it here, I think that you're right in the middle of a trade that if it fails, well, you're trying to bottom pick. We haven't had a confirmation of a breakout to the upside. What would a breach of 22,000 be? Anybody out there know? I'll give you 5 seconds on the chat rooms on YouTube and Twitch, and you tell me if you know why we need the breakout of 22,000. What that would mean? Oh, Teresa, you got another question? Yeah, yes, on the U.S. dollar and the U.S. 100 and the S&P 500, I can actually totally get into that with you. I spent 21 years in the S&Ps, by the way, so at the CME. So yeah, I know that market very, very well. I've lived it, cried, sweat, and bled in that place. All right, so to answer my question for you guys. If we breach 22,000, what does that mean? That means that we will be coming off a higher move low and make a higher move high. What does that mean? If you're making higher move highs and higher move lows, then you are trending higher. So right now we've been making lower move lows, lower move highs. We're coming off a lower move high and a higher move low. So this is the squeeze. So this is why we have the breakout, because if we fall down and hit support and take out the low, then that lower move low obviously comes after a lower move high. That was not a really strong low. We're going to be leaning towards taking out this low from back on June 18th. Okay, so definitely be mindful. Anything below 18,000, that's a death line. 18,000 probably has us going down to, I would say, somewhere around 17,000 to 16,500 very easily. Will that be another buying zone? Maybe. Maybe not. So, but if you take out 22,000, this would be the area you must cross to confirm at least a neutral to higher trade. It sets us up to get to this corrective zone, but remember, the more time it takes, the less likely it is to occur. All right, so before we get into any more cryptos, we have a comment here, a couple questions. Gold, we just talked about that. 50 pips grabs every session. Good for you. Trump rain a lot of gold traders. We need him back. Trump did a lot of things that helped business sectors and actually kept stability in the marketplace. Love him or hate him, no matter what, you can't complain about what he did with the economy and that. So politically, whatever you want to say, that's great. But the fact we did have record low unemployment, record high employment for all types of minority sectors, as well as minority businesses. Manufacturing for the first time in 30 years was actually exploding and growing. Oh, what's it doing now? Oh, that's right. Now they shut it all down. We are now losing manufacturing. Plants are closing all across the board across the United States. So, well, can't blame Trump for that one. You can blame him for a lot of other things. All right, so let's get to Teresa's question about the SPX, or excuse me, the US 100 and the S&P 500. All right, so a great way to check out the S&P 500 is if you go to the forex-trading-unlock.com website. Now, futures are in delay, so it doesn't matter if I pull up another trading platform. I can't do that because I can't show you live quote streaming. If I do that, I get into a lot of trouble because that's illegal. So we go to markets here. We go to the futures tab, and what we have here is we compare all kinds of other futures markets. So we happen to have the S&P 500 right here. So we have the S&P continuous contract. As you can see, get this volume cleared away. All right, get this performance stuff. So yesterday, as you can see, what's this market doing? It was stabilizing after the holiday. There's some very interesting news coming out in a couple stocks today, actually, Crocs being one of them. S&P 500, where are we going? Where is it likely to go? Teresa, this is for you. We can confirm. Let's do some trend analysis here and figure out what's going on. All right, so if we do trend analysis, we continue to make lower move lows, lower move highs. Pretty obvious right there. If we go like this, you can see that the trend is pretty stable as well. We will put a little Fibbo up here. So we'll do a Fibonacci for here and see what we got. All right, so if we look at this high and this last swing low right here, okay? Let's see what we've accomplished. If you look at the 50% mark and you look at the 0.618, the lows there, okay, were pretty solid. We got below there, but didn't seem to be able to maintain it. Now if we go back up to here, let's give us a 50% mark and a 0.618. All right, now we can take this and make it a little easier to see. All right, so as far as upside potential here, I would key off of the major trend lines here using the low from yesterday. And whoops, all right, so we're kind of wedging. All right, so if we look at where things are at right now, we hit really good support for the S&P 500 futures yesterday, and same thing as with the index. In fact, we could put it on indices, S&P 500. Here we got the cash. All right, so now we got the live. Okay, so this is not the futures, this is the cash, same difference. All right, so we do the same thing here. We can see our slopes, really good to the downside. Whoops. Let's get rid of this. All right. Sorry about that. All right, Teresa, here we go. So we can see that the S&P 500 is wedging. We know the overall trend is bearish. All right, and anybody else that has any questions about the S&Ps, feel free to chime in if you trade it or whatever. Now, there's lots of ways you can trade the S&Ps and the S&P 500, in the different stock indexes. We can do it through ETFs, options. Then there's there's binary options, and there's all kinds of other ways to do it. All right, so for Teresa, she wants to know where is it going, what's going on. So we came off this low. We set a lower move high and then a higher move low. So we're keying off of the low set a couple days ago and the high set a few sessions back. So if we see how this is wedging, whether downward sloping resistance or upward sloping support, so we're coming to a point in time where no matter what, by the time we get to, we got to make this a little bit bigger. By the time we get to this day, which would be July 22nd, 2022. Isn't that pretty funny? All right, so between now and then, odds are really good, Teresa, that we're going to break out to the upside or the downside. Obviously today, very flat. It's funny how it's trading like the yen is really basically unchanged on the day. A lot of it has to do with the fact that everyone's waiting on Powell to see if he's going to say anything or not say anything. I'm not expecting any major shift. Once again, we've covered that already ad nauseum. I don't want to really dwell on that part anymore. So let's see what happens. If we take out this low, that means what? That means after a lower move high, we made a higher move low, and then a lower move high, and then a lower move low. So that would be a continuation of the trend. This correction would be complete, and then we would be looking to take out the lows over here. So if we do slide, then, and this is great because we were talking about Bitcoin, is that if we take out the low from yesterday, or somewhere around this 3740 area, well, we're leaning on 3640, 100 points lower in the S&Ps very easily. Now, in the S&Ps, that can happen like that. If there's one market that is wild, and you want to talk about, from our earlier question about scalping, don't anyone out there, and I still trade the S&Ps. If you are not an experienced trader, do not trade stock indexes. There's so much noise. They move very, very quickly. You need to assess your risks, your levels where you have your stops. You have to really, really pay attention to these things. If you don't, you will get, just chewed up, and you will see your capital dwindle so fast it's not even funny. Sorry what will happen in that day. In that day, on July 20, by this day here, we know we'll break out because you have the downward sloping resistance and upward closing support. We could go sideways no matter what, but we will break the trend. We will breach the downward sloping resistance line, or we will break through this upward sloping support line for sure by this day, because any point in time, see where we're at? Even if the market stayed flat and didn't change in price for the next 2 weeks, eventually we're going to come through these lines. That's what I meant by what will happen on that. By that day, no matter what, we could still be trading the same price that we are right now, but no matter what, the downtrend and the uptrend will be neutralized. So we'll definitely have confirmed a neutral trade. Then the question is, when will we break out? I would watch these levels. I think that we're going to break out either one way to the upside or the downside, more likely to the downside pretty soon. Let's see what Powell says later on today. And like I said, I think that's when it's going to happen. And yeah, we'll see. It'll be very interesting this afternoon. I really believe that the speak is the speak. We're going to have to count on that and the fact that the Fed's behind the curve. And we'll just stick with the major trends. And I think you're going to see a resumption of that U.S. dollar bull come back in full force. So yeah, Teresa, fantastic question about the S&Ps. And you wanted to know about the U.S. 100. It's the same difference. They're basically, obviously it's only 100, not 500. But the U.S. stock indexes are basically in the same spot, especially when it comes to the U.S. and the S&P. NASDAQ, not so much. A little bit different story going on with that one. That's because the economies of scale are different. Remember that the S&P 100, the U.S. 100 and the S&P 500 have a lot more real companies. They're physical, tangible companies, whereas the NASDAQ has a lot of tech stuff obviously technology, hardware is physical, it's real, but there's a lot of intangible. Cyberspace is cyberspace. I don't care if you want to say it's real estate and it has value. Of course it does. But still, it's not real. When the power goes out, it may exist somewhere, but you don't have access to it. So then it has no value. What does have value is manufacturing plants, General Motors, things like that. It may not be sexy, but guess what? Until we can start transporting ourselves from Chicago to New York by pushing a button, or wherever, like in Star Trek, we need a Tesla or some other car or vehicle or whatever to get around, right? So I would expect those markets are still the real markets. So really good questions there. Let's get back to a couple cryptos here. Let's look at the ETH USD. Great questions today and great inputs from you guys. Teresa, I really want to thank you very much, as well as the rest of you that have been on there. All right, so now we have the ETH/USD. All right, well, this is pretty much similar. It's doing the same thing as what Bitcoin's doing. You got to wait for a breakout. We're either going to take out this high here from our last swing high, which is our lower swing high, or we have this higher swing low here to take out. Either way, this sets our tone of direction. I do believe that if you're going to see a breakout in Bitcoin, I would key off of Ethereum. It used to be that it seemed that Bitcoin was like the dollar index for, if you will, for cryptos. I would watch Ethereum more. I think that's the one that really drives the market more than Bitcoin now. Bitcoin gets the news. Ethereum, I think, has the weight. I don't know. You have any of you guys trading crypto out there? Got any inputs on that? If you do, drop something in the comment section or on the chat or whatever. I'd definitely like to hear what you got to say about that. Be very interesting. So yeah, with Ethereum, I think we have the same situation as Bitcoin. And once again, if you really are trading Bitcoin or any broad basket of cryptocurrencies, I think Ethereum can help be your guide, not necessarily on tick for tick or in any given moment, but overall I do believe that you have a good chance of Ethereum guiding your way as far as direction in the crypto space. All right, let's go to XMR, US dollar, Monero, this is another one, is wedging and it wants to do the same thing, break out to the upside. Irony of it all is I think that you could have Monero break out to the upside where Ethereum and Bitcoin may still stay wedging sideways. Doesn't mean that they won't break out to the upside as well, but it's not out of the realm of possibility that you would have that type of situation occur. So, one of the reasons I think that's the case is that Monero's technology is very functional and in use. It's at a very good value where it's at right now, and I don't think it has the capacity to sell off the way Ethereum and Bitcoin still has in their or potential for them to do. Not that it can't happen. I'm not saying it won't happen, but once again, I like where it's at, and I think that if you're looking for one that's an investment and still has some capacity for the upside, and I'm not saying it big, you're not going to $1 million with Monero ever, I don't think, but I could see Monero easily get back to that 200, 220 level, even towards 250 to 300 as the crypto space stabilizes. Once again, what would do that? Well, I think you're going to have to see a big rally in gold, a rally in the stock market. And that's what you need to peg out now is that as much as, like I said, my friends in the crypto space, and I'm not talking about the people who are running exchanges and brokerage houses and stuff like that. That angle I totally get. But it's the people who are trading it and relying on it to be something that it's not. You're portraying gold as a hedge against inflation. Look at how well that's doing right now. Okay, but then gold could be way overvalued. So also people need cash. People are running for cash. So and you also got to remember too is that these sanctions on Russia has made the transference and purchase and sales of gold disrupted. Oh, really? Yeah. Absolutely. We're seeing that ramification. So let's see. What do you think about US dollar, JPY, GPUSD? All right, cool. We're going to look at one last crypto, and then I'll go review the US dollar, Japanese yen for you, and the pound US dollar since we're winding things down. All right, so let's look at the Doge USD. I always got to look at this one. Doge, it's winding its coil, it's going lower. Even if it breaks out to the upside, I think you're lucky if you can get it back above 8-9 cents before it collapses back down to 5 cents. All right, so let's go back to the US dollar yen for our new listener out there who obviously has not been with us the whole video, which is all right. So we have the US dollar JPY, which, let's go over here where we got a better chart. US dollar JPY. Got the levels already up. So for you who just joined us here, and one quick review for those of you that are paying attention or have been with us, for Ashanaz, what do you want to know about the US dollar and yen? So here's the US dollar. Yen, we have a head and shoulders that's forming. We have to key off of the low from a few sessions ago here at 134.75. A failure from here has us targeting into this 134.35, 133.63 support zone here. That's a target for the sell signal right here, which is a bearish engulfing line. and that would be if we fall below this 134.75. That's a second sell signal, which has us pressing this area here. It's going to be big support. It's going to be hard to dip below that. If we fail from 134.23, all bets are off as this market tries to stabilize and press its correction to the downside. Otherwise, it's an overall bull. We're looking to buy dips. See, buy tip posture definitely remains in the US dollar yen. We'll see what Chairman Powell says today. Maybe there's some things that disrupt our points of view on these things. All right, now let's look at the British pound, US dollar. This one hitting new lows. It's a grind, though. It's not. You can't compare this one to the euro and the Swiss as far as weakness versus the dollar. Is it weak? Absolutely. Is it really, really weak? No. And I think that unless you have a big sell-off in interest rates and a big sell-off in oil, I don't think you can really, really get the pound to really hit support very much. But we do still have a bearish signal targeting at $16.60. So great question. Thank you for reaching out to us. I hope that made sense to you there and helped you out a little bit. So very great. You guys have been fantastic today. I have to say, all you guys on YouTube and Twitch, thank you for the likes and the shares. I hope that you guys have gotten a lot out of today's thing. And also, I want to show you real quick something. I'm going to give you guys a link to check out. So real quickly, oops, that's not it. For those of you that are actively trading the Forex markets, here is a link for you. So on Tiger TV, TFNN.com, you can see me every Wednesday morning pretty much, and sometimes I do special events on there. We have a weekly Forex newsletter that you can check out. It is your first month. If you, for whatever reason, don't want to keep it, you can have your first month refunded. Right now they're doing a special 25% off the newsletter price, grandfathered, where every month you will be paying 25% less than everybody else unless you skip a month or obviously you cancel. But otherwise, if you don't like it for whatever reason, or you like it and don't want to buy it, you can always cancel it and it costs you nothing. So check that out. We really would appreciate it. And also, thanks again for watching us on YouTube and Twitch. Hit that subscribe button, hit that like button, hit that share button. Leave some comments also in the comment section for us. Thank you for interacting on the chat. It helps us with the algorithms. We really, really appreciate that. We can't even begin to tell you how important that is, you know. So very, very helpful. Very good of you guys. And yeah, since we have no more questions, and I think we've pretty much swept through all the Forex currency pairs. Good luck. We have still yet a Fed announcement, which is about to happen. Oh wait, that's right. It doesn't happen for yet another little bit yet. So we'll see what happens when they at 115. So it's coming out. Markets are starting to glitter up a little bit, a little volatility. I have to get to paying attention to the screens now, okay? So you guys, once again, thank you for everything. You guys have been great, and if you haven't done so already, also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback versions. And don't forget, once again, to subscribe to our YouTube and Twitch channel. Thanks again. I'm Teddy Keckstedt from Forex-Trading-Online.